Okay, there we go. Good morning, everyone. Thank you so much for joining us today. I couldn't be more excited to share the stage today with two of the true pioneers of the MENA startup ecosystem. My name is Courtney Powell. I'm the Chief Operating Officer and Managing Partner of 500 Global. The 500 Global is an early stage venture capital firm that has been investing worldwide now in more than 90 countries for over 14 years. And we've been investing very heavily in the MENA startup ecosystem, and I am today based in Riyadh, so very lucky to be able to call Riyadh my home. And I have with us Nora Al Sarhan and Mazen Al Shimbari, and we are going to be talking today about the incredible growth we've seen in the startup ecosystem here in Riyadh and across the MENA region, and in particular, why we think growth stage investing is now a critical strategy to be able to see the ecosystem move forward even further. So Nora, I'll start with you. Nora is the Deputy CEO and Chief Investment Officer of Saudi Venture Capital, a fund-to-funds platform that has been an incredible catalyst across the region in bringing new managers and truly the concept, I think, of venture capital investing into the region. Nora, please.
Assalamu alaikum. Good morning, everyone. I'm so excited to be here and sharing the panel with my colleague Mazen and Courtney. So SVC is a government investment company that was established back in 2018 with the main mandate to be a market maker and a catalyst for the private capital ecosystem. So we leverage a dual mandate. We invest in funds and we invest directly across multiple asset classes, be it VC, PE, or private debt. And we invest from pre-seed to pre-IPO. So far, we've invested in 50 fund managers and 40 companies directly. Those 50 fund managers actually invested in more than 700 companies. This is SVC in a nutshell.
Amazing, amazing. Thank you so much. And Mazen is the Chief Investment Officer of Jada Fund of Funds, and alongside Nora has been developing and contributing and building this ecosystem for more than 10 years. So Mazen, tell us a little bit about yourself and about Jada.
Thank you. First of all, I want to thank the FII. I want to thank my esteemed co-panelists. It's an honor and a privilege to be sitting next to you here on stage. It's a bit intimidating sitting next to two iron ladies, to be honest. But I'll try to get through this. But Jada, in a nutshell, is again, a fund of funds. Very, very similar. We have a great deal of overlap between us and our colleagues at SVC. But we really have been very active in trying to establish a layer of fund managers that are institutional grade, that will raise institutional capital, that will invest in the region, and our efforts go way beyond just a check. We've been engaged in a lot of ecosystem development programs, like the Emerging Manager Program, and the trainings that we've been enabling in collaboration with our colleagues at SVC as well. And on top of that, also, we've been engaged in a lot of research and writing white papers and trying to get insights out to the market. And it's been an amazing journey. Again, Jada, in the 5.5 years, just some numbers: 41 funds, primarily in numbers. It's going to in the VC space. We have a great deal also on the private equity. We do venture debt and private credit most recently. And yeah, 5.5 or so years into this journey, it's been absolutely phenomenal seeing how this ecosystem has developed. It blew out our we always have blown out our targets out of the waters every single year and achieved our expectations.
Amazing, amazing. And talking a little bit more about the journey, Nora, as I said, you have been really before 2018 thinking about the ecosystem, building out the ecosystem. Can you tell us a little bit about the journey and what you've witnessed in your time?
Yes, of course. So the journey of the VC ecosystem in Saudi actually started prior to 2018. So with the launch of Vision 2030 back in 2016, with the focus on entrepreneurship, innovation, and diversifying the economy, there was a huge project on building the foundation for the VC ecosystem and the infrastructure. So we started with a very big project that included the Ministry of Commerce the Capital Market Authority, and MESA. And the purpose of that project was to remove all hurdles and obstacles that faces the VCPE ecosystem. So with the Capital Market Authority, we worked on updating the company's law. With the CMA, we've worked on updating the fund regulations. And with MESA, we worked on streamlining foreign investors into the kingdom and into the VCPE market. And after that, we worked on establishment of the VCPE Association. So the purpose of that association, it's to bring all practitioners together and voice over their concerns. They sit with decision makers, ministers, talk about limitations and opportunities in the sector. And this has been instrumental to the ecosystem. And the third phase was the launch of NUMU, the parallel market for SMEs to have an exit channel. Then 2018, SAMA, Capital Market Authority, announced the sandboxes. And that helped a lot when it comes to fintech. And there was the launch of SVC and Jada, so market makers that will provide sustainable capital for the growth of this ecosystem. And as an evidence of that growth, if we look back in 2018, investment for the VC ecosystem was only $65 million. Fast forward to 2023, investment actually increased in 21 folds. So it reached $1.4 billion. This is the second year that we crossed the $1 billion mark. And today, Saudi is at the forefront of the region and represent about 54% of VC investment in the region. And this has been the journey. Although it's been a remarkable growth, but we really believe we're still scratching the surface of what's possible.
Absolutely. And Mazen, from your perspective, I think one of the unique vantage points that Jada has had is you've had multiple asset classes that you were actually investing into. So from the development, from 2018, what have you seen? How have you seen the evolution and what you're investing in and supporting?
Sure. So I want to touch on the migration of talent into the tech scene and what sort of drove that. So way back then, like 2014, 2015, we saw a few notable exits bubble themselves to the surface. We saw Talabat and Hunger Station being acquired by Delivery Hero or Rocket Internet. We saw Souk.com get acquired by Amazon. We saw Kareem get acquired by Uber with like $3-point-something billion. So those exits, you know, when they made a splash and they really created a whole load of FOMO amongst the talent that are available. I know people who left very high-paying jobs, and it's crazy the mindset of a founder. So like very high-paying jobs, very prestigious positions, to go and be a poor founder that gets paid probably half as much or peanuts compared to what he was being paid. He's working 3 times as hard. He's jeopardizing his social life and his relationships with his friends and family because he's going to be there building a company for the foreseeable future, and then really chasing that pot of gold at the end of the rainbow and thinking it's going to be a rainbow. It's not. It's nowhere near a rainbow. So but we saw a lot of super smart people jump onto that wagon, really believing that and the availability of capital also helped that. They're like, okay, there are VCs that are being backed by SVC and Jada, and we can get funded. We're very smart people. These guys did it. Why can't we? So like that's on one aspect. The other aspect is also on the fund management side. That also attracted a lot of talent from the CVCs of the world. Back then, STC had a corporate venture capital. Mobily had a corporate venture capital. Sabic had a mobile. Aramco had a corporate venture capital. So a lot of that talent, basically, when they reached the level of maturity, they were like, oh, we need to be in the carry. We need to do. So they go out and they set up their own funds. So like both sides of the equation with the talent getting migrated into these. That's all that needs to be to create a very vibrant VC ecosystem.
I think that's such a great point. And at 500, we often refer to these major exits in the region, like Kareem or Hunger Station or others, as ecosystem returners, because it creates the momentum and the awareness all of a sudden for other people to want to put their hat in the ring and take this
100%.
adventurous route of founding companies. So I think that's exactly right. Mazen mentioned some of the exits, of course, that we've seen. Can you tell us a little bit more, maybe more recent exits, and how you think about these exits being critical within the future of investing here?
Yeah, of course. So the narrative about exits and liquidity in the region, particularly for the VC ecosystem and tech-backed startups, it's a bit complex. There's concerns about liquidity and exit channels, but honestly speaking, we've seen the emergence of incredible exits. So through IPOs, through M&As, or also through secondary sales. And I'll tap into each one. So when we talk about IPOs, 2 years ago, there was the first VC-backed listing for Jahaz. And that was in the parallel market Nemo. And most recently, June this year, we've seen Ta'mini, which is an insurtech platform that got listed in the main market. And both companies were oversubscribed with almost 35 multiples. And if you see Ta'mini performance until now, it's almost increased with 30% with a $5.5 billion cap. So, and Jahaz is now trying to move from the parallel market to the main market. So we've seen the emergence of IPOs in the region. And then there's the M&A activities. You've both mentioned a couple of M&As activities that happened here. So if we go back, Souq got acquired by Amazon. You have Kareem by Uber. But most recently, we saw Tabi, which is one of the unicorns in the region, acquired Twig, an early-stage fintech startup. Foodex acquired POS Rocket. And globally and in matured market, M&A represents 70 to 80% of exits. But here we're a bit, I would say, obsessed about IPOs. So you want startups and founders to think about multiple and leverage different channels of exits. And the third one is that secondary sale. And we've seen a lot of early stage investors exit through secondary sales. A couple of years back, when Checkout invested in Tamara, most of the early stage investors sell their shares at secondaries. But the most notable one was Vision Ventures' partial exit of Sella returned 200 multiples to the company. 85% of that fund was returned from a partial exit. So I truly believe in the MENA region. The channels are there, but you need to leverage different channels, and it's growing.
And I think actually Vision Ventures is such a great example of founders who are technical, managers who are technical themselves, that had a long history here in Saudi, and were able to leverage their expertise to start investing early and then see the success all the way through as the ecosystem matured. Worldwide, I think there's a lot of questions around the exit markets for for venture-backed companies generally. Mazen, do you think there's any sort of competitive advantage that will exist in the MENA region because of the liquidity that's available here, perhaps compared to other markets?
Yeah, I really believe so. Our TASI is a very liquid market, and that that creates ample opportunities for founders. But they would really need to get their ducks in a row and get to some levels of profitability, because listing on TASI is not an easy feat by any measure, but it's absolutely a possibility. And you said, like, over the past year or two, there have been very little, if any, listings in NASDAQ for tech companies. Very, very little compared to what it was before. But we are hoping that the IPO path is going to be quite a viable one here.
And I'm curious as well, Nora, you mentioned kind of the regulatory efforts and interventions that have taken place, particularly over the last few years. How much do you see is the importance of government involvement, not just in the regulatory and opening the sandboxes, but just across the ecosystem, how much support is needed to still get us to where we need to be?
Yeah, so let me take a step back. At the establishment of SVC, we leveraged around 12 working models across the globe. So we've examined different government interactions and impact on the VC ecosystem. And we came back with lessons learned, and we call these our guiding principles. So when we looked at those 12 countries and the success that they've made in their jurisdictions, so we came back with those three guiding principles. The first one would be is to balance the developmental impact and the financial success. So you definitely want to invest based on commercial returns and based on viable opportunities. But at the same time, this will actually sustain those developmental impact, be it jobs, be it startups, and be it investment in this local market. Now, the second one was that they all prioritized national mandates and local investments. And here I'll pick on two of those 12 working models that we've examined. So we learned from the Korean Venture Investment Corporation and the British Business Bank that we have to, when we invest in international, regional, or even local funds, we have to require a dollar for dollar to be invested in the kingdom. So we have that hard commitment clause of investing 1x of our investment into the kingdom, and we do define what is a Saudi company. So it's either headquartered in the kingdom or be it operating in the kingdom with at least 30% of the expenses being here. Now, the last one and the third one, which is to your point, is government has to act as a market maker. And when we say act as a market maker, this means three things. Either in investing in first-time fund managers and emerging fund managers, or simply attract international investors like yourself, like the 500s, and the top-tier investors who invested in the region. And the third element would be is to be sort of a gap filler or opening markets, be it in the venture debt or the private debt or early stage as attracting accelerators to come to the region. And these guiding principles remained with us since 2017 until today.
And I think it's, probably looking back when people study the development of this ecosystem, which at least in our experience, having invested, worldwide, has accelerated much faster even than our typical timeline that we would predict. So normally we would say an ecosystem would move from nascent to emerging to advanced, and there's usually about 10 to 15 years in between each stage. And what we're seeing here is at a much faster clip than what we imagined. And I want to touch on one point, which is sometimes I think a criticism of the region in terms of how they're looking at startups and venture capital by deploying, a lot of capital into managers. But I think what's often forgotten is if you take the U.S., if you take Silicon Valley, we had 30 years of direct government intervention coming from DARPA, coming from the U.S. government to enable Stanford, to enable Intel and HP to then build that market. So that's where we're at today here, although, as I said, developing at a much faster rate. You brought up kind of private debt and venture debt now entering the scene. Mazen, would love to hear from your perspective, how Jada is thinking about, beyond venture capital itself.
Sure. But I just want to touch a little bit on what Noura mentioned about doing things on commercial merit.
Yeah.
It's so important. I believe that we have one shot at this. We either do a good job or mess things up. So you have no idea how many times I get a manager that I say, okay, in our first meeting, and I'm like, okay, so what's your fundraising traction? And they always say, oh, I have 10 investors lined up. They're just saying, when Jada's in, we're in. Yeah. Or when SVC or Jada is in, we're in. And I'm like, is that supposed to make me feel any better? That if there is anything that keeps me up at night, is that. Yeah. And we really, we know that there is a lot of private LPs that they don't entirely piggyback on our judgment, 100%. They do their own due diligence, but they sort of use us as a filtration mechanism, and that really puts a lot of weight on our shoulders to do our homework 10 times over, to make sure the last thing we want is to see a private investor lose money because they followed us into a fund. So like, just really wanted to touch point on that and really ask the forgiveness of a lot of managers that we gave hell to, including you.
I don't remember that. No, it was perfect.
As we're going through the due diligence. But I swear it's such a rewarding feeling when I see a manager 3, 4, 5 years down the line coming and saying, you gave us a hard time, but you guys made us a better investor. And that to me is like the most rewarding thing that anybody could say. So that's on doing things on pure commercial merit, because commercial returns and developmental, I think, are two faces of one coin.
100%.
On the other asset classes within, we are seeing the emergence of credit, and that's a natural byproduct of enhanced maturity of the ecosystem. So credit is usually, or venture debt is usually appropriate for a company that is generating consistent IRR, not IRR, what's it called? Recurrent revenue, and on a growing pace, because they actually have to put that as a collateral in order for them to access the credit. So as the market matures, the product venture debt became such an attractive proposition for both the venture debt providers as well as the startup, because it's semi-diluted, sometimes non-dilutive. This will continue to grow, and we'll see not just the international credit providers coming in here. We'll also see the emergence of local and regional private credit providers or venture debt providers that will come out of the region for the region as well.
I think that's such a critical point. I mean, certainly if we look at other markets that have advanced quickly, and even looking at Silicon Valley, venture debt has been such a huge part of being able to scale those companies who have already reached that stage, but not looking for further dilution, at that round. So very critical. And I know we've got some great players coming to the region, to be able to bring that. I think maybe another question. We are seeing more and more international investors come to the region, starting to make investments, particularly at the later stage. Nora, could you share with us maybe a few examples of, international venture capital firms coming and investing later stage?
Yeah, of course. So we look at international investors in two different ways. The first one, we call them the early comers. So the ones that have presence in the kingdom. So the likes of 500, MSA Capital, Hambro Perks, and the list goes on. Those are fund managers that established vehicles for the region, for the MENA region, and they really believe in the region, and they've been investing here for the past 5 years, and they've had their first vintages and their second, and those are the first comers. And then you see the top quartile, the blue chip funds, the international top tier funds, being attracted to the region, to your point, for the late stage. We saw Sequoia invest in multiple companies. We saw Wellington lead the round in Tabi with the participation of PayPal. General Atlantic invested in Iowa, and the list goes on. So TPG, and there is a lot of undisclosed deals that will be disclosed next month, hopefully, with top names. This is their first investment to the region, and hopefully it's not the last. And I think government initiatives was able to attract such international investors, be it SVC or Jada or the likes of Sanabil, that helped facilitate this investment to happen.
Absolutely, and I'm curious for managers who are thinking about how they should be developing either a MENA or a Saudi-specific investment thesis, or remaining international but wanting to provide some sort of value into the kingdom in particular. Mazen, how should they be thinking about this?
So, okay, every fund manager has baked in opportunistic allocation that they can deploy anywhere in the world. So that's right then and there is an opportunity for them to start dipping their toes in the water and exploring other geographies and other. I can cite an example of Arbor Ventures, for example. They were the first check in Tabi. like Melissa had lunch with Hussam and just gave her an idea. She's like, this is what I want to build. This is my vision. Of course, Hussam has already exited Namshi, and he's got, a successful, exit under his belt. So that puts him sort of in a special bucket of founders in an emerging ecosystem like ours. So, but like literally, give him $1 million with like nothing to show for, but just an idea. She took a hell of a bet on Hussam, and I remember her telling me that one of her LPs were upset with her. But then now seeing that this fund can actually be Arbor Fund, I don't know, it's 2 or 3, their fund maker. So that's a great story for how a manager utilizing their opportunistic bucket to start dipping their toes and exploring other geographies that way. Now, we at Jada also have been exploring quite creative structures like the ones that we've did with PFG. So with PFG, we've deployed a good chunk of capital in the main vehicle, but we also established a Saudi-specific sidecar that is basically that anytime that there is an opportunity in Saudi that the fund has already underwritten, the sidecar can tap into 30% of that ticket, so we can basically increase our percentage. So this is a very creative structure for a fund that is operating in a certain geography, either the US or Europe or Asia, that wants to sort of dip their toes in the MENA ecosystem, but not do it in a way to mess up their portfolio construction that they've already promised their LPs. So like utilizing that opportunistic bucket and potentially utilizing a sidecar structure of some sort. It took many years for us while trying to explore this, and then we finally had the chance to set a precedent with our commitment with Partners for Growth. And I would love to replicate that over and over again. And that's an amazing thing for international managers to do. The last thing I want to touch on is LPs from other geographies backing local and regional fund managers. So we typically make ourselves available to a lot of our GPs to be a reference point. I would like, listen, if it helps you out, and I even tell them, any check beyond $1 million, give them my mobile number. And literally let them harass me, and I'm fine jumping on a call anytime, even if it's 11 o'clock at night,
This is true, I can verify he does say this.
Okay. And we have taken calls from like family offices in Texas that, a family that was basically all in the oil and gas, been looking at Saudi because, it's similar sort of business line, but then they realize, oh, wow, there is actually a good tech ecosystem there. And then that family office, after a reference call, I'm not going to take all the credit. They did. The manager was an amazing manager as well. I'm not going to name them. I don't want to plug anybody, so I don't upset others. So ended up investing. The first time they invest outside of the US was in a fund in MENA. So really, we most notably Sukna, Ra'id, Shuruq, Global Ventures, Nuances, they've all secured serious commitments from LPs from outside the region that created a great deal of FDI to the kingdom, and this is something that is extremely huge for us.
No, I think
yeah,
that,
if I may add
please.
on that, even those blue chip funds and LPs, they invested as LPs in those funds. So fund managers, the like of Lightspeed, General Atlantic, and the list goes on, invested in Global Ventures, and the names that Mazen mentioned. So even the GPs themselves invested as LPs, not necessarily only on startups.
And it's not typical for them. They made an exception. Like I know some of them, were like, we don't typically invest in funds, but we thought this is actually appropriate.
I think that's a fantastic point to bring. I mean, we took a similar approach when investing in markets prior to actually being on the ground, when you want to try and understand kind of what the real throughput is going to be for the deals you're looking at, what the standards are in a particular region that you don't know. So I'm really happy to hear this. Kind of something you brought up, which I think is a growing trend. I would say in 2017, 2018, there was a lot of acceptance of having a regional mandate for early stage VC. I think worldwide, we're starting to hear more and more countries, particularly sovereign wealth funds, who say, oh, actually, we'd like to focus more on our own country. And, you know, as you said, increasing those dollar for dollar requirements or that value add that's coming back into their home country. You know, for the region, do you feel like it will still be important to have kind of a blended approach to investing across the MENA region, or do you think there's at this point sufficient deal flow to be able to have Saudi only, UAE only, Egypt only funds?
Okay, I'll start. So I'm biased. Saudi is a very big market. It's like I always say that it's where it's at. So by nature of like size, demographic, very young population, very tech savvy, high disposable income, it creates, I feel like Saudi can be the rising tide that lifts all boats. Like even all the entire region beyond us, there will be a lot of businesses that will be built in Egypt, in Jordan, in UAE, in Bahrain, in Kuwait, in Pakistan, that the first thing that they think after they conquer their existing market is like, how can we conquer Saudi? So that puts us in a very strategic position to actually be flexible and allow investments in our peripheral for the hopes of these actually coming in. We've seen that happen a lot. Tabi started in the UAE. Now they've moved their headquarters here. HomeSmart started in Egypt, and 70% of their revenue was in Saudi. So the founder was like, instead of like jumping on a plane back and forth, because you need to get your hands on the pulse. Being where your market is very important for a founder. So I believe like he moved his kids, and like they're setting up like the C-suite here. Don't get me wrong, the kitchen is still in Egypt, which gives them the best of both worlds. Really good talent, inexpensive, but at the same time, the market is here and the C-suite is here and building for it. So like allowing this flexibility is going to create an amazing dynamic for the entire region. And Saudi will be deep enough to institute some fund managers that will focus entirely on Saudi. But I believe those were going to be more on the earlier stage, the seed and pre-seed. I think pre-seed, for example, needs to be hyper-local. Accelerators, incubators, but anything beyond that, I think the flexibility creates a great deal of opportunities for everybody.
Yeah, speaking of that, I see Army from Partners for Growth. So we've invested in Partners for Growth, and in their global vehicle. So we just asked them to invest equal amount of our investment into the kingdom, and now they've doubled and tripled our investment in the kingdom. And I just had a conversation with her the other day. She's like, we might have a local vehicle or MENA region vehicle. So it happens organically. When we invested in General Atlantic, we did not require them to even invest in the kingdom. So it was out of our opportunistic bucket, but we knew that there is strategic partnership there. Today, they've invested in Iowa. They've opened shop in the kingdom, and they've hired Ziad Baishan, a local, in their investment team. And they've looked at a couple of deals in their investment committee. So I think for Saudi, to Mazen's point, for the earlier stages, like the accelerator for 500, Flat 6 Labs, and the others, we would love to see more local presence. This has to be, and venture builders, this has to happen on ground. Because if you want to invest in early stage, you have to be closer to partners. Most of them are in stealth mode. But for growth stage, the likes of TPG, they don't have an office here, but they know the market. When I start telling them about companies here, they tell me they've met all of them. So they're here, they invested here, and they're interacting with companies and founders here. So I think the VC investment is a cross-border activity. So be it you're here on the ground or you're investing from arm's length, as long as you invest in the kingdom, in companies in the kingdom, this is what we're looking for.
I think that's very helpful, and I think just more and more we're seeing cross-border. I mean, this becoming such a huge part of not just this region, but we're seeing a lot of interest from Asia, in particular, looking into the MENA region. I think there's going to be a lot of this kind of corridors that get created between key startup ecosystems worldwide. And we talked a lot about geographies and kind of stages. What about sectors? I'm curious what you're seeing, how you've seen the sectors develop over time in terms of what the managers are investing in today.
Yeah, so your earlier question was what would be the strategy for investors to come to the kingdom? So I would say focus on government-aligned sectors. So government will build the infrastructure for that sector, will help ease the regulation, will enhance the regulation, and will invest capital as well. So, and we can look at fintech, for example. Back in 2018, there was less than 10 companies. Today is more than 200 companies in the fintech. Why is that? Because SAMA, CMA had the sandbox. The regulations are being eased there. The financial development sector program is helping fintech companies. Investors are interested to invest in fintech. So today, the largest sector that received capital here in the kingdom is fintech. The largest two unicorns are Tamara and Tabi. And to Mazen's point, Tabi was headquartered in the UAE, now moved to the kingdom. And prior to that, they had 70% of their expenses being spent in the kingdom. So the alignment with sectors that are government focused on is crucial and very important. And today you see healthcare, cybersecurity, AI, and deep tech sectors.
So the early days, everybody was doing sector agnostic seed to Series A. I can tell you like more than 85% of our portfolio is sector agnostic seed to Series A. But that's where the deal flow was. And fund manager would typically gravitate towards where the deal flow is. So it made sense for everybody to be sector agnostic seed to Series A. But most recently, because the market is maturing and growing, we started to see depth being created in certain sectors, like fintech, for example. There is serious depth in fintech, and we are seeing, for example, the venture souk is one of like the very thematic, focused extremely on fintech. They don't want to do anything else. This is their bread and butter. They know that this is what they want to do. And we saw other funds, for example, like Global, having sort of a dominant theme for every vintage of their funds. So like Fund 2, I believe, was a financial inclusion, fintech focused, like 30-40% of the fund would be dedicated to that sector. The next fund would be like more of like health inclusion, and so 30-40-50% of the fund would be dedicated to that sector, but then allowing themselves, room to actually do other sectors as well. So now, as the market is maturing and the depth is being created, we're going to be looking for or actually being excited about more specialized fund managers that are going to be tackling a certain sectors because they have a set of expertise, either a formal founder that turned VC, that is a builder that understands the hurdles and the pitfalls, and him being there with the founders early on, they can really add a lot of value. So that's really what we're gonna start to see soon.
I think you're absolutely right on that, and I think even worldwide, more emphasis on sectors because governments, I think for the first time, are really taking a look at not wanting to miss out on certain sectors that perhaps they did in the past. So we're hearing worldwide a real focus around developing AI, national security, cyber, et cetera, healthcare, becoming more and more dominant, and then funds developing as a result. We've talked a lot about what's gone well within the region and kind of how we're thinking about the future. What are some gaps that still need to be filled, or opportunities that you see for growth, Nora?
Yeah, so basically, to that sector discussion that we just had, I think we're still lagging behind when it comes to deep tech, AI, cybersecurity. And again, there is huge government push for that. They're trying to, but we need to see more founders in that space, more investors in that space, and more players and practitioners in that space.
Yeah. Mazen?
don't know.
We're living the dream.
Yeah, it's like I can't see like a glass half empty view of the world for some odd reason. I don't know how, especially being an LP. But yeah, we'd love to see more in anything around energy because Saudi, being an energy producer to the world, I feel like we ought to be sort of a leading authority on this topic, and the more and more we see in energy technology, either it is being with renewable or basically increasing the efficiency of existing, technologies that rely on fossil fuel. Certain challenges that present challenge for the kingdom, such as water and water desalination. That is a major topic that I would love to see more and more. But that's considered like what Noura said is deep tech. This is like PhD research that needs to be commercialized. And our colleagues and our friends at KAUST, for example, and King Fahd University, and their research labs and their PhDs, a lot of them are, trying to take a crack at trying to solve these big challenges. But we'd love to see a faster path towards commercialization for these deep tech projects.
I certainly couldn't agree more from the deep tech, and I think there's certainly a big push coming that way. I was particularly excited to see the deal between Grok and Aramco Digital, and I think that's actually a really unique angle that the kingdom has in particular to be able to bring data centers and be able to withstand the energy needs related to AI and everything that requires. So I think that is hopefully one of many initiatives that we'll see from Aramco and others to be able to utilize that competitive advantage you've mentioned to really leapfrog in terms of AI. So I think hopefully a lot more to come in that. Just in our last couple of minutes, would love to hear, if you are an investor looking to come to the region, what advice would you give them? What have you seen? What's the number one piece of advice you would give?
So I'll go back to what I just said. So focus on government-aligned sectors. So the infrastructure is there, the capital is there, and the regulations to support that is there. So that's my advice.
Very strategic.
My advice is make friends, build your network. And because that's usually the first step towards having the ability to dip your toes in the water. We've seen, it was like breathtaking seeing the amount of VCs and PEs from around, the world that are showing up to this unbelievable event. And, they just really, really need to put emphasis on building a network, building friendships with a lot of, because VC is not a competitive business to a great extent, not entirely. So a lot of these managers will pull in somebody from, the Golden Gates, for example, or the General Atlantics or whatever. Like, oh, I know you guys invested in a similar deal like this in the US, and, this founder is, building something similar. You want to look at this with us, and you get invited into these deals, and that's the best way to really, set your tentacles into a new ecosystem.
I think that is certainly great advice, and I think we're really fortunate here to have such a warm, welcoming, close community who loves to see investment from all around the world, and new contributors join. Thank you both so much, of course, not only for the session today, but truly the energy and the passion that I know both of you have devoted to seeing the ecosystem continue to thrive. So we're really lucky to be able to build alongside you.
Thank you, Courtney. Thank you, everyone.
Thank you so much for joining us today.